Investors now looking to tomorrow's jobs report for more clues on the economy and possible cuts later this year. Here to discuss, Roger Altman, Evercore founder and senior chairman. Welcome back. It's nice to see you.
Hey, Scott. Thanks for having me.
What was your takeaway from Chair Powell yesterday?
I thought it was both correct and comparatively optimistic, because expectations yesterday morning and somewhat earlier were pretty down. All that talk about a possible rate hike and possibly, even if you didn't see that, nothing in 2024. And essentially what he said was, we need more time to see some more progress on inflation, but there won't be a rate hike. And he's still planning, it was obvious, on the next move being a move to ease. Mm-hmm. And probably this year, although that remains to be seen. Broadly speaking, I think there's some very good economic data here. On the one hand, the economy is showing itself once again to be remarkably resilient, both compared to the rest of the world. And this late in the economic recovery cycle, it's pretty amazing. On the other hand, there are signs of slowing, which they're early signs, but they're pretty unmistakable. And that should be conducive, may take a little bit, to getting to lower inflation, and in turn conducive to the Fed being able to ease before the end of the year. And that slowing, I think investors are starting to see, whether it's the commentary from the fast food CEOs, McDonald's, whether it's the slightly weaker job openings and job quits rate, some other surveys, trucking and so forth, that are showing a little more weakness. And that's positive from the point of view of the medium-term Fed outlook, and also, I think, for investors broadly.
I mean, I thought Steve Leisman just put it into perfect context yesterday when he described what you're saying as the definition of a soft landing, right? Yeah. The economy is going to slow, enabling you to have a soft landing rather than a hard landing of a recession. Now, who knows down the road what's going to happen? You mentioned cuts.
Some people would say the soft landing is already here.
Well, they would, but, we'll see. We'll see. I don't know whether, one GDP read below trend means that or not. But on the idea of cuts, how many cuts are you personally expecting this year?
Well, we could all be talking differently tomorrow after the jobs figure and the wage data, which will be very important. But absent that, one cut. Okay. And I think the election cycle, people will deny it till the cows come home, but the election cycle plays a role. I don't think the Fed is going to want to cut too close to the election.
So you don't think, do you consider July too close to the election?
No, I don't. Actually, I don't think September is too close to the election. But I think the Fed is inevitably sensitive to that and perceptions of it. So my answer would be one. But as Powell's been saying, it is, in fact, data dependent. And should we suddenly see, which we might, slowing wage growth, and just some improved inflation data, then that number could go up maybe to 2. But at the moment, I would say 1.
Are you bullish on risk assets in the here and now? I mean, look, I interviewed Jeffrey Gundlach yesterday of DoubleLine, obviously, right after the Fed chair was finished speaking. And for, moderate risk assets, parts of credit, he's pretty bullish, at least in the near term. And in part because of what the Fed chair wasn't yesterday.
Well, I am pretty bullish. And if you look at indices like the VIX or credit default swap spreads or, futures markets in terms of the funds rate, federal funds rate, I think there's reason to be bullish. And even more broadly, coming back to the first point I tried to make, the United States economy is just a marvel. For the U.S. economy to be growing like this, and if you strip out trade and inventory effects from the first quarter, we're growing an underlying sense of about 2.5%. That's amazing this late in the cycle. I mean, we're about 4 years into the recovery. And you look at the job creation machine that the United States is, 3.8% unemployment rate and so forth. You look at fixed investment. We're the envy of the entire world. And there's just nothing like the U.S. economy. So I am bullish.